Tax Tip Tuesday, brought to you by Stadler and Company, the tax pros.
She's our favorite pro. Lori is with us again on this Tuesday to talk about today an important subject, which is filing status. And this is one that can have a big impact on your refund, right?
It can, yes.
So this is important information for all of our viewers today. So we're just going to jump right into it with the topic of head of household.
So somebody on head of household will actually get a little bit of benefit that they wouldn't get if they're filing single. There's a little bit higher deduction with that. So that's a really good benefit with it. They can also, well, the qualifications rather, are that you have to have a qualifying child who is under age 19 and in school, or under age 24 as long as they are still in school. And they have to have lived with them for more than half the year. You don't have to claim them as a dependent, but you do have to have them have lived with you. That's the important part there.
You know, and I think that's good information too to know. Are there any circumstances though with being unmarried or?
There are some very limited ways that you can claim head of household if you are married.
Okay, okay, so there's just limited circumstances. What does that mean?
Very limited. Well, you can't have lived with your spouse for the last 6 months of the year.
Okay, so there are some things to consider.
Right.
Okay, all righty, good to know. Let's talk about the unfortunate circumstance if someone becomes a widow.
So the first year that the spouse passed away, if they have children, they can still file jointly with their spouse.
Oh.
Well, either way they can file jointly. But if they have children, the next 2 years they can also get those benefits as if they were married. And so, again, it can be a real helpful, you know, because they're getting a little bit higher deduction with the married filing joint tax brackets and deductions.
Well, that's a hard time in someone's life too. So if they're faced with that challenge, that's where those kinds of questions can be answered by you all too.
Exactly. Yeah. And a little bit of tax relief in that situation.
Which is good. That's how it should be.
Yeah.
All right. Yeah. All right. Let's talk about if you're married and filing separately.
So this one is usually not the best situation, but if somebody's a high earner or they just want to make sure they're keeping their finances separate, like in the middle of a divorce, this might be the right way to go.
Okay. Are there any other circumstances where it's good to file separately as a married couple?
Well, if one spouse has debt, pretty substantial debt that the IRS may offset or keep that tax refund, then it can be helpful as well. It just helps to keep those finances separated. There are a lot of drawbacks to this, though. They both have to itemize or take the standard deduction. You can't have one go one way and one go the other way.
Oh, so like if your spouse is taking itemized, you have to as well, even if it's a pain for you.
Well, and that can make a very small deduction for one spouse.
Okay.
Yeah.
But what does it mean when credits are disallowed?
So a lot of credits that you would have on any other filing status are just not allowed. So American Opportunity Credit, college credits, just a lot of those credits
go away. If you're filing separately, you don't get to use any of those.
Right.
All right, so then let's just jump into the filing separately. And as far as taxes go, you said they pay more tax in the end.
Oftentimes, that is the end result, is there's more tax that gets collected. And it's not always, and not usually the best tax situation.
But there's one positive to filing separately, right? You were talking about student loan repayments?
Yeah, so sometimes if one spouse has student loan payments and they're basing that off of what's on the tax return, if they file separately, it shows only their income and it can lower those payments.
Wow.
Yeah.
So if you have student loan debt, it might be worth looking into.
It is a good way to do it, yeah.
Okay.
Yeah.
All righty, let's talk about married and filing jointly, because this is a very common one.
Right.
Right?
It is.
Most married people file together.
Most married people file this way, and it's usually the best way for them to file. They must be married at the end of the year. So if you get married on December 31st, you're considered married filing jointly for the whole year.
Nice.
Yeah.
And it is usually the best tax situation?
It is. 9 times out of 10, probably 99 times out of 100, it's the best way to do it.
So now this was a good one, because say only one of this people works, that doesn't matter, right? You can still file jointly?
You can still file jointly even if only one has income. That's true.
And then you benefit from that as well.
And you both benefit from that.
Okay. Yeah. But you both have, what does this mean? You both are fully responsible for the tax bill.
So if only one spouse was working and there's a tax bill that's due, you're still both responsible for it.
So you can't, at the end, if you decide to, have a problem, it's like, well, that's your bill. No, that's your bill. No,
Right.
it's both your bills.
Yeah, the IRS says I'm coming after both of you if you have a bill.
You're not escaping the IRS no matter what.
Exactly.
Once again, you guys, I know it's your busy season, but your website is a great tool as far as information. If people are looking to get questions answered, what is your website once again?
That is stadlertax.com.
And the number to call if they have questions?
812-478-2800.
And you can scan the QR code you see right there on the screen. Also, it'll take you to the website, too. Thanks for coming in always.
My pleasure.
We appreciate it. It's Tax Tip Tuesdays here on Good Day Live. Stay with us. We'll be right back.